Welcome to the Everything Financial Radio Show here on the Legacy Radio Network. I'm your host, Dennis Tubbergen, and if you're just joining us or you're a new listener, thanks for tuning in. We are here every week at this time. Well, we've got a great show lined up for you, too. My old friend Ian Gordon is going to stop by, and we're going to talk to him about what his take is on the recent Federal Reserve decision to do quantitative easing to infinity and beyond. I think there's a cartoon character that actually used that, but the Fed announced last week they would literally print $40 billion in new money every month to buy mortgage-backed securities. We'll be talking about that today. Also, a Fed report said that if there was less doubt among consumers, the unemployment rate would be 1% to 2% lower. Peter Schiff wrote an article this past week called Operation Screw, referring to what the Federal Reserve did last week. We'll reference that and talk about that. I'm also going to go back a couple years and share with you some excerpts from an article titled Gold at $10,000. It is prophetic. You'll want to stay tuned for that as well. Meanwhile, over in Europe, the run on the Spanish banks continue. And wow, an Obamacare update from the House Ways and Means Committee. It's going to take 80 million hours to comply with Obamacare. That can't be good news for the economy. We'll give you the details also on today's show. If you have not yet requested our 2012 guide, Surviving a Market Crash, we have sent a lot of these things out to folks. Consider it a second opinion on what you're doing with your nest egg. We will be glad to send it to you free of charge. It's got a complete guide as well as a CD. All you have to do to get a copy is go to the website investingapproach.com. That is investingapproach.com. Let us know where to mail the kit. We'll be glad to do that. Also, if you have not attended a discovery group in the last 3 months, we've got 3 more coming up in October. October 2 will be at the Highlands Golf Club. On October 4, we'll be at Boulder Creek. On October the 9th, we'll be out at Watermark Country Club. You can get more information by going to personallegacyseminars.com. Not only can you get more information, but you can also register to attend the discovery group there as long as capacity remains. That website, again, is personallegacyseminars.com. And also a quick reminder, if you want to go back and listen to any interview that we have here on the show, we have a guest expert every week. Those are all posted at everythingfinancialradio.com. So we'd invite you to go there and just click on the Listen to Past Shows link. I'm very pleased to have back with me on the Everything Financial Radio Show Mr. Ian Gordon. Ian has been a frequent guest here on the radio show. Ian's website, I'll let him talk about. He's the founder of the Long Wave Group and certainly one of the economic researchers that I follow very closely. So, Ian, thanks for taking time out to be on the show again.
Well, you're more than welcome.
Ian, before we get started, why don't you let everybody know about your website and your newsletter and what it is that you do so that we don't run out of time for that.
All right. The website is longwavegroup.com, and essentially the long wave is based on Nikolai Kondratiev's work, which was published in the mid-1920s, which was a long economic cycle that he discovered, and of approximately anywhere between 50 and 70 years in length. And the first half of the cycle is sort of when the economy is moving upwards, and the second part of the cycle is when it's moving downwards. And we've divided the cycle into the 4 seasons of the year, which we think are appropriate. Spring is the birth or rebirth of the economy. Summer is the time when the economy reaches its fruition. Autumn we call the feel-good period. It's also called the plateau period. It's where the economy is plateauing out. We call it the feel-good period because autumn is always the period of the biggest increase in prices in stocks, bonds, and real estate. And so everyone feels good because they're making money during that period. And then winter is the payback period when debt is wrung out of the economy, and it's usually a very painful time. And those 4 seasons are approximately a quarter length in time of the entire cycle, so anywhere between 15 and 20 years, each of those 4 seasons.
Ian, let's go to some recent news. Infinite money printing by the U.S. Federal Reserve, I guess that's my term, to buy mortgage-backed securities seems crazy. In fact, I wrote this on my blog quoting a former guest on this program, Peter Schiff, who said, here's an outline of the Fed's plan. Buy hundreds of billions of home mortgages annually in order to push down mortgage rates and push up home prices, thereby encouraging people to buy and build homes and spend the extracted equity on consumer goods. My question for you is, haven't we already done this, seen the debt that was added to the system and seen it fail? I'd like your take on this move, and is this desperation on the part of the Fed?
Well, I think it is desperation. I mean, we've got sort of a historical precedence so that we can go back in history and see what happens when a paper money system that is basically being overwhelmed by the debt that's been built into it. And when that happens, the powers that be become sort of absolutely frantic in their efforts to perpetuate the paper money system. And we've seen that, in John Law's scheme in France in 1720-21, and then the Assignat period in the French Revolutionary times in the 1790s. And, both of those paper money systems failed because they were just simply overwhelmed by debt. But to try and stave off that failure, the governments at the time continued and printed more and more paper money, hoping that they could right the system. Well, of course, you can't. I mean, the debt is really the massive problem that is facing, most countries in the world, and you can't basically solve a debt problem by creating more of it.
CBS News this morning, Ian, ran a story that said Japan's central bank ramped up its efforts to spur economic growth following similar steps by central bankers in the United States and Europe. The Bank of Japan announced it would boost the size and duration of a government bond buying program that's intended to encourage borrowing and spending and obviously devalue the yen to make the exports more competitive. So it seems that money printing is the only policy that central bankers have left. And my question is, you kind of outlined in your last answer what the outcome would be. It's the failure of a paper money system. But when and how, in your view, does this stop?
Well, it stops basically when people the system collapses is when people lose their confidence in paper money, and that's when the whole system sort of comes to an end, and people sort of demand payment in things other than paper. So we're not there yet. The frantic money printing is going to continue, but eventually, because of that massive amount of new money that's being put into the system, and all paper money is debt money. So the more that you print, the more debt you create. And eventually, confidence is going to be lost. We're first of all going to see, I think, the confidence being lost, and paper money values against other paper money values are going to sort of come down. In other words, the euro is going to people are going to lose confidence in the euro as a currency, and it will start to come down even further against things like the U.S. dollar and the British pound, and then. And once the euro, and I believe the euro will collapse as a currency, once that collapses and countries return to their former currencies, or countries return to their former currencies, the attention will be then paid to the other big detonations like the United Kingdom and the United States, and their currencies will also come under attack. And I think that I suspect, anyway, that China has been amassing massive amounts of gold. If you look at the imports going through Hong Kong, they're huge, and also China is the largest gold-producing nation in the world, and none of that gold is allowed to leave the country. None of the gold that's produced in China is allowed to leave the country. So I suspect that China is sort of building a gold fortune to eventually tie the renminbi to gold, and that will essentially change the whole world monetary system once you go one country going back to a gold-backed
Ian, we may have to pick this up in the next segment. We've got a couple minutes left here. We just talked about all this money printing, and on past appearances on the program, you have been a staunch deflationist. Well, given all this money printing, a lot of folks that I speak to are concerned that rampant inflation is just around the corner, and given these policies that are being put forth by central bankers, have you changed or altered your deflationary view?
No, I haven't, because the problem is the massive debt structure, and debt is in effect deflationary, because as debt comes out of the system, either paid down or through bankruptcy or such other means, all that money that is actually being taken off the table, so that it's gone, and so the more money you print, you're trying to keep pace with the amount of money that's actually being taken out of the economy at the same time, and eventually, so I remain a deflationist, because I think that debt overwhelms the economy, and essentially you can't have inflation as the debt level is first.
Well, we will get more of Mr. Ian Gordon's views and talk about real-world consequences in the next segment when Everything Financial Radio returns. Stay with us.